Hello everybody, welcome to the video on Accounts Receivable interview questions and answers from Career Ride. Accounts Receivable is a very important department in any company because its operations have a direct impact on the cash flow of the company. AR professionals can find work in all the big industries, including manufacturing, retail, healthcare, financial services, telecommunications, technology, transportation and logistics, real estate, energy and utilities, hospitality and tourism, education, government and public sector, NGOs, pharmaceuticals, construction, etc. In today's video, let's find out some basic conceptual questions which are almost always asked at an AR interview. We'll also see some questions related to the management of AR, which are important for the candidates at all the levels. If you're really serious about cracking your next interview, make sure you watch the complete video without skipping any parts of it. Ready? Fantastic. Let's start. Question number 1. What is accounts receivable? A very basic question to open the conversation with. To answer this question, you can say accounts receivable or AR is any amount of money owed by customers for purchases they have made on credit. Accounts receivable are listed on the balance sheet as current assets because there is a legal obligation on the customer to pay them. Pay attention here. These are current assets. But since this money is not yet in the bank, it poses a certain degree of risk also for the company. A high level of AR in comparison to the cash means that the company is lethargic at collections. So a high AR is definitely not a good sign. On the other hand, while a low level of AR looks good, it may also indicate that the payment terms of the company may not be attractive for the buyers, and the company is not able to sell as much as it can. So basically, it is not a good idea to go just by one figure. Digging deeper is important here. These type of things need a proper investigation and understanding, and this is what is very important to communicate in your answers. Moving on to question number 2. What are doubtful accounts? See, this looks simple but is actually important for any AR professional. To answer this question, you can say there may be certain accounts that the company is doubtful of receiving full payments on. These accounts are called as doubtful accounts. A rise in this account indicates two things. Number 1, the company is issuing credit to risky customers. Or the other reason could be maybe the customers are not happy with the product or services they have received, and that is why they are not willing to pay. Question number 3. How does AR show up on the balance sheet? Okay, pay attention. This question has a high possibility of being asked, and many candidates commit a mistake here. So let's try to understand this with the help of an example. Suppose a company XYZ agrees to sell goods worth rupees 50 lakhs to its customer ABC on 60 days term. Now this means that the customer has 60 days to pay the amount. The entries for this transaction would look something like this. First, at the point of sale, XYZ company would record rupees 50 lakhs as receivable by debiting its accounts receivable account. A rupees 50 lakh credit is also entered into the revenue account to balance it. This is at the time of sale. Now, when the customer makes the payment, XYZ company reclassifies rupees 50 lakhs as cash on its balance sheet. It will debit the cash account and credit the accounts receivable account. Okay. Now, let's move on to a question about a strategic thing that happens in the world of AR. The question is, what are AR discounted? Now see, many a times when a company feels that while it is in need of cash, but it is difficult for it to collect its outstanding payments from the clients, what it does is, it sells these outstanding invoices to a third company for a cash value, which is obviously lesser than the total value of the invoices sold. It is now the responsibility of this third party who has bought these invoices to collect the payment from the clients. It can collect the payment and keep the money with itself. This third party is called as factor, and this whole process of accounts receivable financing is called as AR factoring or AR discounted. It is called discounted Because the AR factor is getting these AR invoices at a discounted rate. Okay. Question number 5. What are the various ways in which a company may get financed on its accounts receivables? To answer this question, you can say there are various ways in which a company can get capital finances based on its accounts receivable. Two of the most common ones are: number 1, asset sales. Here, the financer takes over the accounts receivable invoices and takes complete responsibility for collections. The financer would of course try to minimize the risk and get the ARs that have not been due for a very long time. Remember the AR factoring thing we just discussed in the last question? It's that. The second thing is loans. In this case, the AR invoices are not sold like the previous case. The company needing the finances here just tries to get an advance based on accounts receivable balances in the form of loans. The loans may be unsecured or secured with the invoices as collaterals. The borrower here pays interest or service charge on the loan, and the assigned receivables serve as collaterals here. If the borrower fails to repay the loan, the agreement allows the lender to collect the assigned receivables as per the agreement. A very important question, pay attention, and if you haven't got it properly, you can try replaying this much part of the video and clarify the things for yourself. Okay, coming to another important question now. Question number 6. What is Accounts Receivables Turnover Ratio? Now see, the Accounts Receivables Turnover Ratio measures the number of times a company collects its average accounts receivable balance in a given period of time. The ratio here basically shows how efficient is a company in collecting its outstanding balances. If the ratio is low, it suggests two things. Number 1, either you are lethargic at collecting your accounts receivables, that is why your ratio is low, or the other thing could be you are taking the efforts but you are not able to collect. This suggests that your collection process is either inefficient or your credit policies are inadequate, or on the other hand, you are extending the credit to customers who are not financially viable or credit worthy. So it is important to think of everything in this manner. On the other hand, if the ratio is high, it suggests that your collection process is very efficient and you sell mostly in cash. But on the other hand, it might also suggest that your credit policies may be very conservative, which might be driving away a lot of potential customers. If you loosen up your policies a bit, your business may have better chances to grow. So you see, it is always possible to analyze everything and then reach the conclusions. And that is what the interviewers are also looking for in the potential candidates. Okay, so along with the answer, show this analytical mindset also during the interview. Okay, now the next obvious question that arises from here is, how can a company improve its accounts receivables turnover ratio? Because everybody would like to do that. So there are various things a company can do to improve its ARTR. Number 1, you can make your credit policies better. Assess the credit worthiness of your clients well and set their credit limits based on their repayment history. Secondly, you can improve the invoicing process. Accurate invoices ensure that there are no disputes and delays. At the same time, ensure that you raise your invoices as soon as the products or services are delivered. A delay in raising the invoices would perpetually cause a delay in the payments also. Number 3, improve your collection process. Setting up a structured follow-up process is one of the best ways to achieve this. Automated reminders, escalations at the right time go a long way in improving your collections. Then you can incentivize early payments and penalize the delayed payments also. These two things act as big catalysts in getting the payments on time. Proper segmentation of accounts based on their payment history, regular monitoring, and reporting also help in developing strategies to deal with specific accounts in a timely manner. You are able to take the actions on time. Incentivizing the sales teams makes them more accountable towards timely collection of receivables. So this is another strategy that you can use to improve your ARTR. Many a times the payments get delayed due to disputes in the invoices. A good relationship with the customers and an efficient dispute resolution process goes a long way in resolving these disputes quickly. Focus on them. And let's move on to another important question. The question is, what is Accounts Receivable Aging Report? To answer this question, you can say an Accounts Receivable Aging Report is the one that categorizes the open invoices based on the time period they have been open for. For example, this invoice is open for 30 days, 60 days, 90 days, or beyond. When you do this for all the AR invoices, you start getting a very clear picture of which accounts are turning risky, with which customers you should do only cash business, what actions can you take to recover the money from a particular account, such as selling them to the collectibles or pursue them in the court or whatever other actions you may want. You will also get to know which accounts may turn into bad debts and may need to be written off. What all of this would do is this would help you predict your cash flow also and plan your activities accordingly. That is why aging reports are very, very important. Question number 9. What is Accounts Receivable Subsidiary Ledger? A subsidiary ledger is also referred to as the subledger or subaccount. An AR subledger is a subledger that shows the transaction and payment history of each individual customer to whom the business extends credit. It carries all the details about the credit sales, discounts, returns, and allowances for a particular customer. So, if you want to see what's happening with a particular customer, open his subsidiary ledger. You'll get a clear and detailed picture of that account. Now, coming to a question that is very important from the point of view of metric in AR. And the question is, what is Days Sales Outstanding or DSO? To answer this question, you can say Days Sales Outstanding or DSO is the average number of days it takes for a company to receive the payments for a sale. If the DSO is high, it means that the company is taking too long to collect its payments after the sales, and vice versa. Now, it is a good idea to analyze the DSO over a period of time. For example, if the DSO of a company keeps increasing over a period of time, it is obvious that the company is going to face the cash crunch. But what's actually important here is to understand why is it happening. The reasons could be number one, maybe the salespeople have taken the liberty to offer longer payment terms to the clients to drive sales, or we are extending the credit to wrong parties. It is also possible that there's a fall in customer satisfaction because of which they don't want to pay on time or at all. In that case, we need to look into our services and our products. There could also be something wrong with the invoicing process and accuracy of the invoices. Fluctuating sales volume, seasonality, industry could also be the reasons for the DSO of a company to be the way it is currently showing up. Again, what's important here is to investigate, as you can see from the answer itself. But you would yourself notice that these type of detailed answers demonstrate the type of hold you have got on the subject, and they can help you in impressing the interviewers. Most of the candidates won't go so much into the details. If you can, you'll definitely have an edge over the others. Moving on to another important question. What are delinquent accounts? After how many days do you consider accounts delinquent? Now, delinquent accounts are those customer accounts for which the payment due date has passed and the customer has not paid the amount owed within the agreed time frame. Usually, when the payments are overdue for more than 90 days, the accounts are labeled seriously delinquent and in default. But it also depends on the industry standards, company policy, and the credit terms that have been agreed upon, such as net 30, net 60, and so on. Okay, now pay attention to question number 12. This is a very, very important question. The question is, what are the various methods used for writing off uncollectible accounts in AR? So, there are two primary methods used for writing off uncollectible accounts in AR. The first one is direct write-off method and the other one is the allowance method. In direct write-off method, the uncollectible amount is directly written off by debiting the bad debt expense and crediting the accounts receivable. Pretty easy. In allowance method, you have to estimate the uncollectible accounts in advance and record an allowance for doubtful accounts. This method, although difficult, it aligns with the matching principle of accounting, ensuring that expenses are recognized in the same period as the related revenues. Okay? Now, let's move on to some questions that can help you in managing your own performance. The first such question that we have got here is, what are the key reports used to manage the accounts receivable? To answer this question, you can say, some of the key reports used to manage ARs are, number one, we saw aging report that categorizes the accounts based on the time they have been due for, such as net 30, net 60, net 90. This report helps you identify overdue accounts, prioritize the collections and assess the credit risk. A separate invoice aging report focuses on specific invoices. The second important report that works for you is Accounts Receivable Turnover Report. As we have seen earlier, ARTR helps you assess the efficiency of your payment collection process. So that is why it is very, very important. The third one is Collections Report that discusses the actual collection in a given period. Then you have Credit Risk Report that discusses the risk associated with each customer based on their payment history, balances and credit limits. The fifth one is Bad Debt Report that discusses the accounts written off as bad debts in a given period. This report is essential for financial reporting and adjusting the allowance for doubtful accounts. If there are too many write-offs, clearly there is something seriously wrong in the process. The next one you have got on the list is Cash Receipts Report. This is used to reconcile cash receipts with the bank deposits and accounts receivable records. Then you have DSO report that helps in monitoring trend over the time and setting up the targets for improvement. Then you have customer credit limit report that helps in managing and controlling the credit that can be extended to each customer. Another important report that you have got here is the last one for today, dispute management report that helps in tracking and resolving disputes efficiently. Timely actions here help in maintaining good relations with the customers and also ensure that you are able to collect your money on time. Question number 14. What KPIs should be tracked to measure the efficiency of the AR department? Now, your answer to this question basically tells the interviewer how aware are you about what a good performance is in this profession. What are the various criteria on which your performance is going to be evaluated? Because someone who is aware is more prepared to deliver. So, some of the major KPIs used to measure the efficiency of AR department are, number one, DSO, that is Days Sales Outstanding. You have got your ARTR here. Aging of accounts receivable, collection effectiveness index, your bad debt ratio, average days delinquent, percentage of current receivables, percentage of overdue invoices, cash conversion cycle, write-off ratio, dispute resolution time, percentage of high-risk accounts, collection rate, cost of collections, customer satisfaction with collection process. All of these are very important KPIs that are measured as a part of your performance. We have already discussed many of these things and they are quite self-explanatory. But I would highly recommend being thorough with each of these KPIs as they basically demonstrate your awareness and readiness to shoulder the responsibility, as I said just a while back. And finally, coming to the last question for today's video. What challenges does AR face while operating across multiple countries and international currencies? Now, managing accounts receivable across multiple international currencies involves many challenges, which includes dealing with things like currency exchange rate fluctuations, which can directly impact the value of receivables altogether. They also need to ensure compliance with various international regulations. The complexity increases with different payment terms and practices in different countries, banking and transfer costs, and potential invoice discrepancies also. Additionally, there can be issues related to taxation, language barriers, cultural barriers, and the need for accurate reconciliation, etc. Then, integrating systems for reporting and cash flow management across currencies can also get challenging. So, see yourself if you're getting into the AR department of a company that deals with international clients, this kind of answer would tell the interviewers that you are aware of what to expect and what you are getting into, doesn't it? And again, as I have been saying since the beginning, someone who is aware is more expected to deal with the things. So, these are some important questions on AR that you can expect to be asked at an interview. If you are interested in a career in accounts payable, the video currently showing up on your screen will help you tremendously and you will find it really useful. The link is available in the description box below. If you found today's video useful, do give it a thumbs up and share it with your friends also. For more such videos, subscribe the channel now. I'll see you very soon with a new video. Till then, bye bye and take care.